the S&P 500, the Nasdaq 100. We have quite a bit to talk about here in the video, but I'm trying to get to it as quickly as possible. We're not going to waste too much time. Let's get to it. Now, when we look at a few things, I want you to just follow along, and I'm going to kind of be popping in and out both ways here. So as you can see, I want to go over higher time frames first to just start this off. Now, this week we have a little bit going on, and I'm going to go over that as quickly as possible. But the first thing I do want to just go over some of these indexes. And the first one is going to be the Russell, and I do want to talk about this. It has been like kind of the going conversation. Now, this is a monthly chart, so you're going to have to bear with me going all the way back to basically, last year. And you can really see, I mean, you kind of have like, I would not consider it a flag. I've seen people mention it possibly being a flag. But what I'm really watching for here is, as we're looking at this, is going into some of these timeframes and going into some of these indicators as far as the daily and the weekly, right? So we have that 200 SMA. You did break back below this week, but you're operating still above the top of that zone that we had on the Russell. And why is the Russell so important? It's a factor of risk on versus risk off. I think it's one of the biggest indicators of, money flowing into the market. Okay. And so we're going to talk a little bit more about this and what's happening there. ES specifically, we go out to something like the monthly. And I think when you look at the monthly here on ES, I don't know how you don't get excited. You can clearly see, I mean, we talked about this last year of potentially, even though we were trading primarily to the downside, that, the possibility of that being a year-long bull flag, and now you're pushing out of it. You also see how you respected this level down here at 3850 to 3800, how you bounced out of that, how we reclaimed 4100, reclaimed 4200, reclaimed 4300, and now kind of struggling here at 44. But why is that not really a surprise? Because it was kind of the line in the sand way back here as well, which you can see. You hit it, came back down, broke above, mounted, and continued up. So you can kind of see this going trend of like you're coming into a resistance. Yes. And you can see how we got stuck here for 1, 2, 3 months and then rejected down. But look at the progress that we have made here, right? And this isn't to point to a bullish or a bearish narrative. We'll get more into that here in a second. Going into Nasdaq as well, it's the same kind of theme, right? Not really changing anything up here, but you can see like you have that downward channel over the course of the year, which was arguably worse than ES. And then to start the year, it's been better than ES to the upside, really bouncing back from lows of 10.6 all the way up to highs of, 15.5 roughly, already kind of hitting some of those major levels that we had, in comparison to ES, right? Coming right back into those levels. We go into Dow, and, Dow, I believe Dow was the first to really recover from last October. But again, you're going to notice the same kind of going trend here with the major indexes, right? They're very, very similar, some a little bit stronger than other. I would say ES is the one lagging the most maybe as of right now. But even the Dow trying to break back up. Obviously that 35.2, 35.1 is a bit of a resistance. But again, that comes all the way back, as we mentioned. As you can see right here, it goes all the way back to over here, which you can see, and kind of how that's playing out. And price action, supply and demand definitely plays a part in this. So again, what are we talking about? What are we looking at here? What are the big focal points here? In my opinion, I think we got to be a little bit patient, because this week we do have some big things on the board. And when I talk about the board, it definitely gets exciting. So this was posted on Twitter. I posted it on there, and it was in Discord, and it should be on the newsletter that was dropped today. And before we get into this, I do want to ask you to do two things. Consider liking and subscribing. As you can see, we post videos every single day here. And then also, too, if you're interested, the Discord link is down below. If you do want to get access to the newsletter, all you do is go over to the website. The link is down below. Go to the newsletter, hover over, scroll down, sign up. This is absolutely free. You can go over past instances, and you can probably still get this week's newsletter if you reach out to us. But you can see there's no ads, nothing like that. It's absolutely free. We always want to give you guys free content. Also, if you are new and you want to get some education, we do not charge for a course or anything at the moment. So right now, all that information is kind of free on the website. Go over to education, and we have articles on every possible question you could ask, and we're actually cooking one up this morning as well, so there will be a new one by the end of the day or maybe tomorrow. But you just come in, we'll see how to use key levels. You go into it, and usually everything has a video tied into this. You just scroll down, has a quick explanation, you all the way to the bottom, and then there's actually an educational video at the end from either me or my partner, Jay Ream. So again, all this is there for you. Again, another instance of the newsletter. But yes, now, again, there's three things we're focused on this week. We have Russia, PAL, PCE. Now, Russia, this is kind of something I'm just throwing on there because I don't know how we're going to react to this about what's happening. And it's not going to be a bulk of the video, but it's like the wild card of the week. I feel like every week we have something that's just like anything can happen, and this is that one thing. Powell. We do have Powell speaking 2 times this week. One's at 2:30 in the morning, so I'm not too worried about that. But he also spoke last week, and again, we noticed a going theme when Powell was speaking. Nothing really changed. PCE end of the week, which is very big. So this is the schedule for the week. If you want to check it out, it's on my Twitter. I posted it earlier. So you can actually see you have durable goods, and not saying these aren't important. Okay, I'm not saying these are not important or nothing's happening here. But in my opinion, the biggest thing is going to be on Friday, PCE inflation. I'm going to go into exactly why, because we got to talk a little bit about that in particular. Now, PC inflation, Powell continued to say, if you watch the video on Friday, I made it really clear and I highlighted Powell's exact words. The biggest problem with inflation is that core inflation is not coming down. So we look at what's happening with core inflation, and the one in particular he keeps mentioning is core PCE data. Okay. Now, on top of that, when we look at inflation, you're like, well, Tyler, CPI is coming down, PPI is coming down, PCE is coming down. Those are coming down, and we've gone over this based on energy. Right? If you've noticed where PPI, CPI, PCE peaked, it was all when energy peaked back last June or July. And then once energy fell off from, being 120 a barrel, obviously energy prices dropped, cost of delivery, cost of goods, cost of manufacturing, everything dropped as well because energy prices fell also. So that was a big catalyst there. But now we're seeing energy continue to plummet, and the data keeps dropping as well, but not on the core side of things, which kind of takes energy out of the question. And we're kind of just sitting flatlining right now. So the big thing in this week and the big thing going into Powell is going to be what's happening with rate hikes or continued rate hikes. So right now they did pause. We anticipated a pause into this month, and it makes sense. So if we look at what's happening traditionally with pauses, you need to understand the overall movement that happens in the market. You traditionally aren't just going to get rate hike. That doesn't ever really happen. That's why I always tell people, they're like, well, when they pause rates, typically the market drops. I'm just like, let's take a time out for a second. When's the last time that they've done 7 rate hikes in a row, of which 3 were 75 basis points, and then the others were 50 basis points? Name me in history when that's happened. I think it was over 7 actually, but that's besides the point. Still, there's so many happening. So when they do have a pause eventually, it kind of gives the market a little bit of like, you're coming up for air from being underwater. You're constantly raising the rates, and it was for such a long period of time. It was so easy, so cheap to borrow money, to spend money, to put money back into the market, right? So that's the point that we're at now. And then on top of that, we have this AI craze, which is, I think, revolutionizing the entire market. We're seeing profit margins go out the wazoo on some of these companies, NVIDIA, AMD, Microsoft, the biggest tech names in the world, are all finding different ways to make money now based on everything that's coming out. And this will probably increase the unemployment pool as well. So when we look at this, a lot to come out. So with this week, the question now is, PCE gives us more information. If PCE comes out good, I'm going to tell you right now, and like I don't think there's anything that's giving us a clear answer on PCE coming out very good. There's no reason why it should come out different other than energy continues to look pathetic. But besides that, if it does, it's the off chance it does, you're going to see the market react in a narrative that Powell will continue to pause again. And if that narrative continues, you will continue to see this market up and away. But if it comes up bad, then you're going to see the idea of a rate hike coming back into the market, which even though Powell has said they want to raise at the next meeting. But again, we've seen the market be irrational and not really price in the things that the Fed says, even though the Fed has been pretty consistent with the things that they've said. So going back into the charts again, we need to identify, you're coming into a big inflection point on the week. Again, PCE on Friday, the last day of the week. So we need to understand, all these indexes are coming into very big levels, very big points, and the newsletter will have this really in detail, so I don't want to focus too much on that today. But I mean, we can go down the list. The Dow, ES, Nasdaq, they're all coming into massive points, and they've all rallied a lot. That's not to say that they can't keep rallying, right? Because when we look at some of these equities as well, that's, I think, what you have to be focused on is, you had semiconductors doing a lot of the heavy lifting over the past few months. And I would say this month we've seen, semiconductors at the beginning of the month were killing it. And then after about midpoint, we've seen semiconductors kind of slow down, right? The one that has continued to rip is NVIDIA. NVIDIA is remaining damn near at highs, but still looks pretty good. But what we're not talking about are these other big names in the market, the biggest names in the world. Apple continues to push into higher highs and higher lows. You can call this a wedge, whatever you want, but people have been calling it a wedge for the past 4 months. So I just want that to be on our radar as well. If the number one company in the world continues to make higher highs and is in price discovery, it's hard to be bearish right now. Going into Microsoft as well, you pushed in again, made a new, was that an all-time high? I want to make sure before I just say something, but no, yeah, you did make an all-time high. And I want to highlight right now, this is a very similar reaction that Apple had. When Apple first made its all-time high, you pushed up, came back down, then you pushed up again. So just understand the action that's kind of taking place here. I don't expect us to just go straight up forever, but we need to also understand that when you do hit these levels, you do hit big resistances, I expect a little bit of an inverse reaction at first. And so we're just continuing to see more of the same. Same thing with NVIDIA. You broke your all-time high, you gapped up from earnings. Everyone said you were going to dump and plummet, and then you pushed back up. It's important to realize money is flowing into this market right now, and it's going to continue to do so. It is what's happening. Now, the reason why I want to talk about this really quick, and I want to explain something before we go into that. So when we look at what's happening, money, okay, as an investor standpoint, and I want people to understand this, and we're doing things today a little bit differently, no green screen, nothing like that. Money always, or investors, but I like to think of it as money. I don't like to put a face to the dollar, right? Money always wants to be growing, especially when it's not, just like when it belongs to someone. You always want to have your money growing. An investor, they're greedy. I don't care how much money someone has. You always want to be growing and growing and growing, not just sitting, hoarding, burying it under a rock. That's not the goal. So when you look at the market, there's easily just two ways to look at it: risk on, risk off. And what that means essentially, and I did this in a live video the other day, is the dollar or commodities are traditionally the way to look at a risk off market, which means if it's risk off, you don't want to have your money in equities because that's where the risk is. It's because they obviously are more volatile than something like a commodity or the value of a dollar. But as of recently, and as of really the past 6 months, give or take since October, the dollar has been getting crushed. So the risk off mentality has had to take a little bit of a switch, because traditionally what you would do is you would either exit your equities in a risk off, sit in the dollar, or sit in commodities. But what have we seen so far? Because when we come back to these charts, things get really clear. And this is the two charts that you want to watch for risk on versus risk off if you're trying to make money. Like in 2021, 2022, I continue to say, remember, oil made us made us all the money in the world, right? Made us the money, right? But now you have oil. I mean, this is the dollar right now, but you're going to notice the charts are very similar. The dollar is making a descending triangle, trying to break down. Right now, we have manipulation with other currencies and big sell-offs, but I don't want to talk about that right now. Oil, same, very similar chart. Now, the only difference here on oil is that you can clearly see where you're at, and it's not pretty. This is the 200 SMA on the weekly, and you can clearly, this is a massive support. I mean, look, 1, 2, 3, 4, 5 now, right? Over the past, give or take 3 months, you've just been riding this level, making lower lows occasionally and lower highs clearly. Now, if we go back, when was the last time we broke below this level? Now, again, it's pretty gross. You go back to, pre-COVID, where you were just riding this as a support, very similar chart, right? And then you eventually broke, and then obviously when COVID hit, oil just got demolished, right? But you can go back and forth. Let's go back, to 2014, right? And there's different circumstances here, so I don't want to put them all in the same box as far as fundamentals. But look what happens. You ride this as a support, and then you get below it, and you get crushed. I'm just saying, you get a lot of volatility when you traditionally break this level, right? And I'm not drawing this up. This is just go look for yourself of what's happening here. And it's the same thing over and over and over. And I want to mind you right now, the U.S. wants oil to drop. I'm going to tell you that right now because it's keeping inflation under control. They need to refill their strategic oil reserves, which we've been talking about for the past 7 months as well. So that's another visual to take. On top of that, you got to be watching yields. And again, yields are one of the best indicators of what risk on versus risk off as well. Now, this is where things get disconnected, okay? Because yields, I want to highlight, they are still all going up. In particular, the 2, 5, and 10, right? And then your inversion of the 10 and 30 is still almost damn near a full inversion. So when we look at that, I think we get a little bit more answers as well. So from a risk-off standpoint, commodities and the dollar are in the shitter. They're just getting destroyed. But from the other standpoint, where the safety is still in these yields and those bonds. Now, everyone's saying, well, you can still make your money on these bonds. That's the case for the bear market. You need to be putting your money in these bonds. It's worth mentioning bonds reached like those pinnacle, and also if you're looking at commodities, you can look at gold. I know people are going to comment now and say, hey, well, you didn't mention gold. Gold also has been getting like, you have a clear double top on like a monthly time frame as well, 1, 2, 3. It's pretty bad also. So I do want to say that. And before I go back, I want to also highlight where you're on yields. Like, you're just sitting at highs. So when we look at that though, and that's a 2-year, like the 5, 10, 30, they're probably not going to get as high as they were. They could, but they're not there yet. They still have a ways to go. But I just want to say something. For all the people now claiming that yields are this high and that's where everyone should be putting their money, I just want to say, how often have we seen it that something gets to these extreme high levels, they dip, and they start to kind of peak back up, and everyone's like, oh, now you need to buy. I'm just saying, like, I understand traditionally when it's like you miss the first run and you want to get in the second time, it's traditionally too late. That's usually when it's like, you might get screwed. Now, yields, you're not going to get screwed if you put your money in them. You're going to get your money back. But the market's looking at it from a point of, what's the best reward opportunity? Now, granted, some of these names, like I said, Microsoft, the biggest names are at, all-time highs. But what about the companies that have, in my opinion, a lot of reward opportunity? Google, AMD, these are still mega caps, but they're directly going to benefit from this AI craze and everything that's taking place right now, but they're just not as high as Nvidia. Google's not as high as, Microsoft. These are things you got to start taking into consideration. And then you go down more of the line of some of these mid caps, Square, PayPal. I just go down a list of all these names, Upstart, just go down the long laundry list of companies you may like. And look at the reward even if you run 50% of the move you had in 2021. Just think about the possibility and the rollover effect, but then think about it from a viewpoint of a hedge fund, of understanding, is it really that risky to even be buying names at these levels? Because if you're a hedge fund, you're not looking at it from a 5-month perspective. You're looking at it for a year, 2, 3, 10 years down the line of how much money and what could really be changing in the economy, and how often do you actually get a dip like this to where names run from $10 to $300 and then back down to $5? When do you get these opportunities? And I think that's just the question we have to be asking ourselves. But again, for the short-term perspective of this market, I think you need to be looking at a few things this week. Again, Russia, I don't really know what's going to come out of that. I really don't. I think both guys, Putin and the other guy that's like going against them, they're both crazy. They're both killers. I'm not in support of either one of these people. One's not better than the other, right? It's like, pick who you want to be the devil, I guess. I don't know. So I'm not going to really speak on that, but that's just like a wild card scenario. Powell speaking. Let's see if he says anything new. Don't think he will. And then PC inflation is the most important thing on the book. That's the most important thing. Friday PC. That's all eyes, all expectations on that. I don't think Powell says anything new. That's my expectation. If you have any questions, comment down below. See you guys tomorrow. Have a good one, traders.